Hi guys, welcome back to another video. We have a lot of things to talk about. Big events from last week, big movement in the index, Nifty's price action before the budget, and also we will talk about the Feb month strategy which I shared in the Telegram group. So let's get started. First, let's start off with all the weekly narratives that dominated the market last week. Nifty, Bank Nifty, mid cap, and small caps all were under severe selling pressure. Nifty fell nearly 2.5%, Bank Nifty 2.7%. Mid cap and small caps were the worst hit, nearly 4.5% and 5.8% fall. These are the areas where most of the small investors have put bulk of their money for expectation of a quick return, but they have been hit very badly in the recent move. So here are the top reasons why this sell-off happened as per the media and all the gurus available out there. What did they tell? The big move came because of the US European Union trade deal tensions and the tariff wars and also the Greenland issue. On top of the existing tariff, what happened was Trump announced nearly 10% additional tariffs on 8 of the European Union countries from Feb 1st, which is nothing but nearly our budget is coming the same day, and additional 25% if they don't complete the purchase of the Greenland deal. Now, this is something like blackmail or some sort of a geopolitical move which has affected the market. The second rumor was that 200% tariff threat on France products, on the French products, if they don't comply in the your Greenland deal. This was just to put pressure on those European Union leaders. This all happened on the 20th of Jan. All the major indices around the world on 20th of Jan had a big sell off. You can see in Nifty we had nearly 1.38% intraday drop. Dow Jones also fell 1.7%. CAC 40, that is nothing but a French index, they also fell nearly 2%. What actually happens in this kind of a risky scenario in the global markets is that money gets transferred from the stocks, which is more risky, to a more stable asset like commodities and precious metals. You can see gold and silver in particular have been having a very good rally in the past few months, and this year especially had a blasting move. So in silver and gold, the reason is because the big players, the big money, they already think about such situations. That's why they tell gold and silver is alarming situation, because these big players, they move into the assets before the retail, before the small people will get to know the news. They discount future events. Now, the next story is that there was a speculation or there was a rumor that the Greenland deal was all sorted out. This reduced the trade tensions and also the risk on sentiment was back in the market, and there was a relief rally. Nifty itself, from the lows of 21st, it rallied 375 points from the low. Dow Jones nearly rallied 770 points. Now, the last story which dominated Friday before the market closed was that the sudden selling in Adani Group stocks. This was a stock specific event, risk selling in Adani Group stocks. Nearly 10% fall in the Adani Enterprises, and the other stocks almost fell from 3 to 14%. This is coming after the news that the US SEC, Securities Exchange Commission, has given the courts the permission to serve summons for the $265 million bribery schemes to the big leaders in Adani. So all this has happened in the previous week. Now, my question to you is, after you hear all these news, what do you think that this is the reason? What is the actual reason behind the fall in Nifty? The truth I'll tell you is, all this news does not matter. Don't chase the news. Why? I'll tell you, because on the November of 15th, we had one video which I put out called the final turning point. In that video itself, I told you on November 15th that 25,153 level has to be retested no matter what. Anything below it is just bonus down move. This was the analysis shared early on in the November month. Those who understand market structure, those who study the Elliott wave properly. Now, every day is everyone I see, everyone is a guru now in social media regarding Elliott waves. They're posting some random ideas. Okay. But if you know the truth about Elliott wave, how it actually moves connected with psychology, then you already know that this move, this 25,153 level, I told you in the month of November itself, that it was going to fall. Watch this video later. You will understand much deeper. Those who are really serious learners, you can learn it later. Right now, question is, what next? What is the next journey for Nifty? Main point was this 25,487 level. What was the importance of this level? This level, I told you in the lower time frames when the previous video was, that this was an algorithmic buying, which price came here and sudden reaction, right? This was an algorithmic buying. Somebody's SL was triggered in the start of the month. In the January strategy video, I told you when price comes near the safety level. This is one of the safety level, and the other safety level was 26,550 522. These safety levels based on the strategy of the big players. So what happens is market will show some volatility when it comes here. What happened last week was it gave a nice 1 hour candle close below it, and after that it was just a single direction waterfall in the market. Straight flush down all the bears, flush down all the bulls immediately. This safety level did not hold, and then one straight direction. Like I said, again, global sentiments pull the market back up, and then we fell down again. Question is, what do we do now? Before the budget, what happens is there is volatility, no doubt about it. The budget, which is coming on the first of Feb, is a Sunday, I think, and that Sunday is a trading day in the Indian markets. 26th, which is your Republic Day, is a holiday. Monday is a holiday, and Sunday next week is a trading day. Stock markets are expected to be open unless there is any other further change in information. Now, question is, what did we discuss in the video of the final turning point? I'll just give you a small idea so that you can understand better. I have explained it also, and I've given you a February month strategy in the Telegram group. What is all that? Quick idea, I'll share it with you here so that you'll have a clearer view of the market. This entire move, like I told you earlier, this is a possible expanding diagonal. This is a possible expanding diagonal, and then it can go like this also, and then final move. So what is this pattern? If I just tell you in simple words, it looks like this. It's part of Elliott waves, but I have not covered this in my Elliott wave master course. The reason is because I don't trust this pattern fully, and the original author R.N. Elliott, the main man R.N. Elliott, who discovered Elliott wave patterns, he himself did not mention it in his book, original book. Afterwards, his students are the Elliott wave institutions. They discovered this pattern, and later the modern day traders, they have added it in the Elliott wave theory. So this pattern is nothing but an expanding diagonal. We have discussed this once before, many times also. This is a high probability setup if this low holds. Okay, if this low holds here near 24,750 to 800, if this low holds, we are likely to see an ATH, and this move is expected to be fast. The magnitude of this move should be greater. Magnitude as in length. Length of the rally should be bigger than this rally. It should be bigger. So question is, this entire point is nearly 1700 to 1900 points move, right? So let me just check. 1900 points. So 1900 points from wherever the low comes, from this point or wherever the low comes, 1900 points rally is expected to come. Okay, this is the highest move in the market of this year. It will be 1900 points, and this will be the last rally before a very big correction in the market. So now question is, what do we look for? I'll tell you very simple. I have drawn this diagram here before. I've shared it in the Telegram group. I'll just explain it here. This is nothing but your FRVP. What is FRVP? how to use it, what are the rules, what are the settings, how I use it, how you can use it. All this, we have 4 lectures available in the YouTube channel. Study them. It's very, very powerful. You can apply it on any chart and use it with any method. Here, there is one FRVP zone. The old operators activity zone is here. What did the market do? It came here, stopped, and easily broke down. Okay, it easily broke down. The POC level is here, point of control level, easily broke down. So what I see is sometimes the market extends below it and goes to some other spike. Sometimes overextension happens. So that overextension level is 24,750 to 24,880. Okay, this is the overextension level. From here, if market holds this level, we are easily going to see ATH. This has to be clear. Okay, this is a very simple move. I have been waiting for this move since November to happen. It has happened. As per Elliott wave theory, this is my first scenario. This is my first scenario. The trigger can be budget, it can be after budget, whatever. Simple. If market comes here, very good. So my support zone right now is this range, 24,700 to 25,100, 700 to 25,100. This is the support area. Logic, I've explained it using price pattern. This is what I'm looking for. Now, question is, what if on Feb, the budget day, we see a big candle? What happens in the market if we see a big candle? What to do then? What I've done is I've shared in the Telegram group, again with disclaimer that I'm not giving you a recommendation. I have shared a strategy which is a ratio spread. I'll zoom in and show you better. A ratio spread is nothing but what I'm targeting here is that what if sudden market rallies, nearly 1,000 point rally, what will happen then? I have taken this position here at the moment, 27,000 call option, making a ratio spread here. Simple. With 26,450. In the Telegram group, it was 26,500. I have just changed this lot. So what is the logic behind this? The logic is, again, there is no guarantee of a big move. The idea that suddenly if market gives me a big move on budget day, 1,000 point move, and that day, I'll tell you again, it is not smart to chase any trades, intraday trades that time, because your SL might get hit, your entry might be different, it can vary a lot. So intraday is very dangerous. Don't play simply on your budget day, either before or after. After budget day, there is an event called IV crush, implied volatility crush. So whatever you do, your call options, why I chose ratio spread is because call options will have IV crush. So even if the market moves 500 points, my call option will be in negative. This I'll explain it in another video later, call option, IV crush and all that. Same thing on the downside also. If market falls 500 points, my position, if I'm holding a put option, it will be in negative only. This I'll explain. Like IV crush, you can Google it. It's a very simple concept, but right now it is not relevant. So this was one of the idea why I chose ratio spread. And if you see this logic here in ratio spread, this is almost flat. The maximum loss I will take here is 600 rupees in this strategy. Maximum loss I will take is 600 rupees if I go wrong. So if there is no bounce, if there is no freak bounce of 1,000 points bounce or whatever, if there is no bounce and market stays flat or falls down, I will lose maximum 600 rupees only in the entire month of February. That is one of the strategy I made. I shared it in the Telegram group in the live market. Now, question is, second reason why I didn't take call option. Why am I not planning? If I expect a bounce from here, why am I not planning to take call option? I told you first reason is IV crush. Second reason is that there is a chance that I have to plan for the worst. Okay, I have to plan as an Elliott wave trader. I have a plan in case market sustains below this. In case market sustains below this, anyone, in case market is below this, anyone who's carrying call options, naked call options, they will get crushed immediately after budget. If market breaks down, they will get crushed immediately. So in this case, what will happen? There is this lower level. There is this lower level of, let me just mark it. Yeah. So 24,000 approximately to 24,500. Okay. This is a possible target on the downside. This is a possible target on the downside if this level breaks. Simple. This is a very simple logic. And anyone carrying Feb calls after budget and this level breaks, this will immediately give them nearly 50 to 60% loss. That is the second reason why I did not choose naked option buying, even if I expect bottom here. Okay, this is one of the reasons. I have two scenarios in mind. Both plans are active right now. On a smaller time frame, if you see Nifty on a 15-minute chart right now for the weekly expiry on 27th, market has not given us any clue. Even option chain is not valid here. It is complete noise in option chain. At this point here, we don't know whether market is going to fall further or it has going to take a pause. It is not clear. The price action is incomplete. All right. So right now it is not smart to play any positional bets, especially in the Indian markets, regardless of what happens, what is the news flow and all that. Here, just wait till the budget, clear idea you will get, and then we will find a different path and we can play that. Right now, on the 27th, I will share another February month options video where we will discuss how in the January month we found out these levels, the safety levels. Correct? We will do the same thing for February month in the next video, the February monthly strategy video. I'll see you in that video, guys. If you enjoyed or if you found this video somewhat informative, definitely leave a like and comment. I'll see you in the next video. Till then, take care and be safe.